Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks, we love to hear what different stocks you're looking at and your opinions on the market sentiment. Today we're looking at 3 casino stocks and which one is a better bet. The pandemic has caused a lot of casinos to temporarily close down their operations and lay off workers. But with the rapid rollout of vaccines as well as the easing of restrictions has caused casinos to bounce back quite strongly. But despite this, several casino owners are better positioned to streamline their operations compared to last year. A lot of them are focused on profitable avenues such as sports betting and online gaming. The first casino stock is MGM Resorts International, and its ticker is MGM. MGM's portfolio includes 32 hotels and gaming destinations in the US and Macau. These include popular resort brands such as Bellagio, MGM Grand, Aria, and Park MGM. And MGM has also become one of the key players in sports betting and online gaming market through Bet MGM, which is a joint venture with Entain plc. This was launched in 2018. In fact, on April 4th, Bet MGM launched its online sports betting and iGaming platforms in Ontario in Canada. This was its international debut. Including Ontario, Bet MGM now has a presence in 23 markets. And with more US states legalizing sports betting, MGM sees Bet MGM as a vital growth driver. In fact, MGM and Entain plan to invest $450 million in Bet MGM this year. The company expects Bet MGM operations to deliver a net revenue of over $1.3 billion in 2022, up from $850 million in 2021. And aside from Bet MGM, the company is also investing in its digital capabilities and in developing an integrated casino resort in Japan. And alongside all of this, MGM reported fantastic results for Q4 of 2021, and it posted an adjusted EPS of 12 cents compared to a loss per share of 90 cents in Q4 of 2020. This was driven by a 105% year-over-year growth in revenue to $3.1 billion. In fact, the company's Las Vegas Strip resorts and regional operations delivered year-over-year revenue growth of 277% and 51% respectively, and these were also above pre-pandemic levels. But it's important to note that revenue from MGM China grew by a modest 3% year-over-year, and it was down 57% compared to Q4 of 2019. The main reason for this lackluster performance in China is because of travel and entry restrictions associated with the pandemic. The current price of MGM Resorts is $38.68. The analyst rating consensus is a moderate buy based on 13 ratings, 7 a buy, 6 a hold, and 0 a sell. The analyst price target on MGM is $56.38, which is a 45.72% upside based on 13 Wall Street analysts offering 12-month price targets. Citigroup analyst George Choi deems it to be a buy with a $57 price target, which is a 47.82% upside from where we're at. Choi believes that MGM is a major beneficiary of solid recovery in Las Vegas and the rest of the country. Choi said that we also like the casino operator for its leaner cost structure and its improved gearing after a series of asset monetization transactions. The latest update from management on Bet MGM also points to encouraging market share trends, and the JV expected to be EBITDA positive by 2023. The second casino stock is Wynn Resorts, and its ticker is WYNN. Wynn Resorts operates Wynn Las Vegas, Encore Boston Harbor, Wynn Macau, and Wynn Palace. The company also has nearly 74% interest in Wynn Interactive, which actually operates the company's digital sports betting and casino gaming business. In February this year, Wynn announced an agreement to sell all of the land and real estate assets of Encore Boston Harbor to Realty Income for $1.7 billion in cash under a sale-leaseback transaction. This transaction was done in the hope that the proceeds from the deal will provide it with liquidity for several upcoming projects and the potential to retire some of its debt. But meanwhile, with China's tighter restrictions during this pandemic, as cases continue to hurt Macau's gaming business, Wynn has higher exposure to Macau than the rival we mentioned earlier, MGM. And in Q4 2021, Wynn's operating revenues increased 53.5% year-over-year to $1.05 billion. This was ahead of analyst forecasts of $994.1 million. Adjusted net loss per share narrowed to around $1.37 from a loss of $2.45 in Q4 of 2020. But this was worse than analyst loss per share estimate of $1.25. Now, although we saw strong recovery in the company's Wynn Las Vegas and Encore Boston Harbor operations, this was offset by the weakness in its Macau operations, which includes Wynn Macau and Wynn Palace. But despite this, Wynn remains confident that the Macau market will benefit from increased travel over the coming quarters as the pandemic restrictions ease. The current price for Wynn Resorts is $73.40. The analyst rating consensus is a moderate buy based on 12 ratings, 5 a buy and 7 a hold. The analyst price target on Wynn is $107.54, which is a 46.39% upside based on 12 Wall Street analysts offering 12-month price targets. Citigroup analyst George Choi is also bullish on Wynn, and he gives it a 96.50 price target, which is a 32.59% upside from where we're at. And Choi recently commented that for most of 2020 to 2021, share prices of the Macau casino operators were driven by border reopening expectations, and unfortunately the resetting of such expectations. But Choi expects different catalysts to drive the share prices this year, and this includes the expected passing of Macau's gaming law amendments and the license retendering process. And as a result, Choi believes that Wynn's valuation is undemanding following the sell-off in its shares, and that the company should benefit from increasing focus on the premium end of the mass market in Macau. The third casino stock is Caesars Entertainment, and its ticker is CZR. Caesars Entertainment was formed by combining Caesars Entertainment Corp. And Eldorado Resorts in 2020, with the combined company operating over 50 casinos worldwide. They also operate the company's sports wagering mobile app, Caesars Sportsbook, and this is live across 22 states and domestic jurisdictions, 16 of which offer mobile wagering. In fact, last month, Caesars Sportsbook partnered with Naira Bets LLC, the official online wagering platform for the New York Racing Association, to launch a new horse racing account wagering app, Caesars Racebook. And amidst all of this, Caesars Q4 2021 revenue grew by 63.5% year-over-year to $2.59 billion, and it had a net loss per share which improved to $2.03 from $2.67 in Q4 of 2020. But analysts were actually expecting revenue of $2.63 billion and a lower net loss per share of 83 cents. The main thing is that the company's bottom line was impacted by the Omicron outbreak and investments in the digital business. The current price for Caesars Entertainment is $70.23. The analyst rating consensus is a strong buy based on 12 ratings, 12, all of them being a buy. The analyst price target is $120.08, which is a 70.98% upside from where we're at, based on 12 Wall Street analysts offering 12-month price targets. Analyst Steven Wyszynski from Stifel Nicolaus is bullish, and he gives it a $127 price target, which is an 81.12% upside. And he believes that right now, the risk-reward scenario in Caesars stock is too compelling to ignore. Wyszynski explained that from here we see 5 potential catalysts for the remainder of 2022 that should allow shares to return to triple-digit land. We believe that Caesars Entertainment remains well-positioned long-term as the world eventually recovers from this pandemic, given their compelling asset mix. Now, all 3 stocks are in the red year-to-date, but analysts are more confident about Caesars Entertainment. This is because they have expectations of strong recovery and higher upside potential in the next 12 months. So guys, what do you think of these 3 casino stocks? Leave your thoughts in the comments below. Also remember, this is not financial advice. Make sure you do your own research before you invest in anything. Thank you guys for watching, and I will see you in the next video. Bye!